We are covering Schedule 1 of Form 1040, focusing on Part I, Additional Income. The exam tests your understanding of the tax system's structure, not just isolated rules. Think of Form 1040 as the main highway. Schedules, like Schedule 1, are the on-ramps where you collect specific types of income before merging them onto the main 1040. The exam will give you a scenario and ask where an item is reported or if it is taxable. They want to see if you know which on-ramp to use. The total from Part I of Schedule 1 flows directly to line 8 of the main Form 1040. A classic exam question involves state and local tax refunds. The test will present a taxpayer who received a $2,000 state tax refund and ask if it's taxable. The trick is that the answer depends entirely on the prior year's return. If the taxpayer took the standard deduction in the prior year, they received no federal tax benefit from their state tax payments, so the refund is not taxable income. However, if they itemized their deductions and deducted state taxes, they did receive a tax benefit. In that case, the refund is taxable up to the amount of the benefit they received. The exam will explicitly state whether they itemized or took the standard deduction. This is a critical detail. A helpful way to remember this is the phrase, itemized, it's in, standard, stay out. This mental shortcut reminds you that if they itemized, the refund is in income, and if they took the standard deduction, it stays out. Another area tested is unemployment compensation. This is often a straightforward question, but it's designed to catch you off guard. Unlike some other benefits, unemployment compensation is fully taxable at the federal level and gets reported on Schedule 1. The exam might try to confuse you by providing answer choices like partially taxable or non-taxable up to a certain limit. Don't fall for it. Unless a specific temporary law is in effect, which is rare, unemployment is always fully taxable. Schedule 1 also serves as the collection point for other common income types that have their own dedicated forms or schedules. For instance, net profit or loss from a sole proprietorship is calculated on Schedule C, and the final number is then entered on Schedule 1. Similarly, net capital gains or losses are first figured on Schedule D and then carried over to Schedule 1. The exam will test your knowledge of this flow. For example, a question might ask where a self-employed consultant reports their $100,000 of gross receipts. The answer is Schedule C, which then flows to Schedule 1 and ultimately to Form 1040. Understanding this pathway is essential for success. You might also see questions about other income. This is a catch-all category for things like gambling winnings, prizes, and awards. Remember that gambling winnings are reported on Schedule 1. A taxpayer can deduct gambling losses, but only on Schedule A as an itemized deduction, and only up to the amount of their winnings. The exam loves to test this limitation. They might give you a scenario where a taxpayer has $50,000 in winnings and $60,000 in losses. You must know that only $50,000 of the losses can be deducted, and only if the taxpayer itemizes. The gross winnings of $50,000 are reported on Schedule 1.